And guys, we're back with a PGBP. Good evening, everyone. Welcome back. We are going slow, we are going steady, but we are getting there, guys. We have done a couple of chapters. PGBP is a slightly big chapter, but dealt well and dealt right now well will help us get a different idea because when we learn PGBP for the first time, we go section wise. But right now, I'm going understanding wise. So we've discussed a couple of concepts on PGBP already. So this is the next leg of PGBP. In this leg, we will complete PGBP and we'll look at PGBP questions from ICI material. And if a big if in capitals, if time permits, we will also look at the next chapter, but only if. So with that, guys, let's continue with PGBP. In PGBP, we've already seen the incomes which you can have from your business or you can have from your profession. Doesn't matter what you're doing, doesn't matter, guys, whether it's business or profession, both are taxed under PGBP. Then you have expenses. The expenses are basically the golden rule. They should be in relation to PGBP. Right from section 30 to section 37(1) are expenses. So this is what are expenses under PGBP. We have done with section 30, which is for land and building. Section 31 for plant and machinery. Section 37 we did, which is general deductions. And section 36 we did. We've also done section 35, which is scientific research. And now let's move on to the next one right away. Guys, this next one is a business which you are told by the government that can you please develop these businesses because as a country we need these businesses. Example, a hospital with at least 100 beds, a hotel which is at least 2 stars, a fertilizer manufacturing plant, an airport, a port, a bridge. So these are called specified businesses. And the government has told us to develop these businesses, and if we develop these businesses we are going to get some amazing deductions under a section called section 35 AD. So let's guys take a building worth 70 lakh rupees and let's make a hospital of 100 beds in that. So this is a hospital of 100 beds at least, so hence this is a specified business. Now let's see what are the benefits that they are offering us, and do we need to know the list of specified businesses? My specified business basically is a hospital, a hotel, warehousing of food grains, warehousing of sugar, but we don't need to by heart it. You can just read that list once and you should have got a good idea about what these are. They can never give a question that enumerate 6 industries which are in specified business. Now that I've started this hospital of 100 beds, is that a specified business? Yes. So what is that benefit that I will get? They say that the biggest benefit that you will get in this is this ideally this building of 70 lakhs. You would get this building would go in the asset side of the balance sheet that you know guys, and you would get a depreciation at the rate of 10%. That is 7 lakh rupees you would get as depreciation. Is depreciation good? Yes. Is it an expense? Yes. Does it reduce your income and hence it reduces your income tax? Yes. But the government says, listen, you are special. You are doing a business that I have told you to do, so you are special, and in that case, we will not give you just 100% depreciation. We will give you 100%. We'll not give you just 10% depreciation. We'll give you 100% deduction. That means the entire 70 lakhs we will give you. Yes. So guys, is this a good thing? Yes, this is a great thing. Now, what is the value of the building now in the balance sheet? The value of the building will become now 0. So this is basically a great benefit because you get 100% deduction. But here, there are some conditions attached because they're giving you a huge deduction. First, this deduction is not available in case of land, in case of goodwill, and in case of financial instruments, because in these cases they say you don't get any depreciation, so you'll not get any 100% deduction. So you can buy any asset and you get a 100% deduction except land, goodwill, and financial instruments. In this case, you will not get any deduction of 100%. Next, they say that you got to use this asset for 8 years. Guys, that's a promise that they're taking from you, that you have to use it for 8 years. For which business? For any specified business. It doesn't have to be a hospital only. Tomorrow, can you convert this hospital into a 2-star hotel? Yes, no problem. But you have to use it for any specified business for 8 years. What if you don't use it for any specified business, and what if you take it basically to a non-specified business? Example, you convert this hospital into a mall after 1 year. Then the government feels very bad because you've broken your promise. So what they say is, whatever deduction we gave you, that is 70 lakh, we will want to take it back. So we will reverse this 70 lakhs. Yes. And they will reverse it where, guys? In PGBP, they will reverse it. Yes, they will reverse it in PGBP. But guys, it's almost like this, that they did not give you a depreciation of 10% because they gave you 100% deduction. So if they are reversing this deduction of 100%, at least they should give you depreciation. Because guys, you get only one of the two things. Either you can take commerce or you can take science. You can't take both. So if you take commerce, then you can go ahead and do CA. But if they remove you from commerce, at least they should give you the option to do CA. Same way as to do science. Same way here. If they are going to reverse this 70 lakhs, we are okay. We broke a promise. You can reverse the 70 lakh, but at least you will give us depreciation for how many ever years I use that building. If I use that building for 1 year, then I will get at least depreciation deduction of 7 lakhs. So please remember, these are two things that you'll have to do whenever you have to convert this into a non-specified business asset. Next, guys, these are huge deductions. If you get a 100% deduction, that means you get a deduction of 70 lakh rupees. That's a huge deduction. So sometimes it leads to losses. This loss from specified business is a very unique loss. Why is it so unique? It's unique because only if you have any profits from specified business can they be set off. So can I set off this specified business loss from a profit of a CA firm? No, it has to be the same or similar or any specified business. How do I trust you whether you've taken the right kind of deduction? So you need to get an audit report for this compulsory. Yes. Whether you're big fish, small fish, you will need to get an audit done for this kind of a business. Yes, you will have to get an audit done. Guys, this is section 35AD. The moot point and the main point of this is 100% deduction, but for that you will not get depreciation. This is the main point of section 35AD. This is specified business section 35AD. I'm just checking if there's anything else in 35AD that we need to discuss. Revenue expenditure, anyways, you will get the deduction. All right. And guys, if you make a payment of more than 10,000 for this, let's say you buy another capital asset. Let's say for this specified business, for this hospital, you buy an AC worth 40,000 rupees. Should you get a 100% deduction for this also? Yes. But what if you paid 40,000 in cash? Then this is not allowed, and hence deduction will also not be allowed. So basically, no cash more than 10,000 per person per day. All right, anything else? That's about it, guys. This is section 35AD. Is this important? Yes, the 100% deduction is absolutely important. They have asked a couple of exam questions on 35AD. Next, guys, companies very often pay VRS. VRS basically is voluntary retirement. So this is a company called Delhi Development Authority, and they have given VRS to their employees. VRS is basically when the employees are not useful, you cannot forcibly remove them, so you offer them money. So let's say they've told every employee who wants to leave the company can take 20 lakh rupees and they can leave the company. So this is an employee who wants to leave the company. We are not talking about the employee right now, we're talking about this company, Delhi Development Authority, and they are giving this VRS. Is this a business expenditure? Yes. But because this is a large business expenditure, the government says we cannot give it in one shot. So we will give it to you in 5 equal installments, this deduction. So every year, the year you pay, and after that 4 more years, you will give 4 lakhs. So basically this 20 lakh will be given in 5 equal installments. And this is a section called section 35DDA, Delhi Development Authority. So this is another section done and dusted, 35AD or specified business. This is 35DDA, Delhi Development Authority. Now guys, sometimes it might happen that you are starting a new business, and before you start a new business, guys, just like before you start school, you would shop for your school bag, uniform, etc. Just before you start your CA course, you do a lot of preparation. Same way, guys, before you start a business, you incur certain expenditure which is called preliminary expenditure. Preliminary expenditure is basically expenditure in relation to the business but before the business starts. Example guys, incorporating the company, issuing shares, advertisement expenditure, some small research, etc., some market survey whether the company can do well, etc. These are some preliminary expenditures. Guys, let's say your business starts today, 15th August 2022. From today onwards, you will get every expenditure, but this preliminary expenditure is before 15th August. So will you get that deduction? They say yes, we will give you a deduction, but not in one shot. We will divide it in 5 parts. There's a section called section 35D, D is for divide. It says that I will divide this deduction. So let's say you have incurred preliminary expenditure of 10 lakh rupees. So they say we will give this 10 lakhs over 5 parts, that is 2 lakhs every year for 5 years. This is what 35D says, that preliminary expenditure will be given in 5 equal installments. Now what is preliminary expenditure? Preliminary expenditure is every kinds, but if it is project FEM, this is a shortcut guys, then only from approved sources or only from in-house sources, if you've done this expenditure, it will be a part of preliminary expenditure. What is this project FEM? If there is any project report that you have developed, then you should have developed it from an approved source or you should have developed it in-house. Any feasibility study, any engineering study, any market survey, all this should have been done in-house or from an approved source. Only then will it be a part of PE. Example, you got a market survey done, but you got a market survey done from an unapproved source, then in that case, sorry, it will not be a part of PE, you will not get a deduction. So project FEM only from approved source or in-house source. What about other expenditures like incorporating the company, share expenses? That from any company, any CA firm you can take, no problem. So this is one condition. Second condition, it has to be revenue expenditure. Example, what if I bought a new building? Can I take that as a preliminary expenditure? No, it has to be only revenue expenditure. Only revenue expenditure can be a part of this preliminary expenditures. So project FEM for approved and in-house sources and revenue expenditure. So let's say you total up all your preliminary expenditure and it totals out to be 10 lakh rupees. Can I take that? Yes, you can take that in 5 equal installments. But what if this was 10 crore rupees? Is there any limit? Yes, there is a limit of preliminary expenditure. So we have kept a limit, or we have kept a cap of the total preliminary expenditure. There is a capping. What is the total preliminary expenditure capping? 5% of the cost of project. So if you're starting a new business, obviously this is a project. So what is the cost of project? Let's say the cost of project, for example guys, the cost of project is 1 crore. Then maximum 5 lakhs. So we'll keep a slightly different amount. Let's say the cost of project is 90 lakhs. Then in that case, 90 lakhs into 5% is basically 4.5 lakhs. So can I take 10 lakhs as preliminary expenditure? No, you can only maximum take 4.5 lakhs. But what if I'm a company? Then you either take 5% of cost of project or 5% of capital employed. You can take, let's say your capital employed, example, your capital employed is 1.2 crores, that is 6 lakh. Then we can take 6 lakh. Yes, you can take whichever is higher. So for companies, 5% of capital employed or cost of project. If you're a partnership firm, proprietorship firm, then only 5% of cost of project. Next guys, what is this capital employed and what is this cost of project? Let's discuss guys. Cost of project basically means all the cost, including land. Yes, the land cost, the building cost, the plant and machinery cost, the furniture cost, every cost on which day of the year, whichever year you're starting, that year's last day. So if you're starting in the year 21-22, then on 31st March 2022, that day, whatever is the cost. And what about capital employed? Capital employed means equity. Yes, preference equity, whichever is issued and paid up, preference share capital, debentures and loans. Again, on which day? On 31st March 2022. That is the year you start, that year's last day. Because you're starting a new business, so whichever year you start or whichever date you start, that year's last day, you have to take capital employed. Guys, if you've taken foreign loans, then they will be included in this calculation only if they are more than 7 years. So guys, first, What is preliminary expenditure? It's expenditure incurred before you start the business. Is it allowed as a deduction? Yes, in 5 equal installments. But you remember project FEM, you remember revenue expenditures. So you total up the expenditures, etc. It is 10 lakh. Can I take unlimited? No, there's a capping. Let's calculate the capping. 5% of cost of project or 5% of capital employed, whichever is higher. Capital employed is everything except loans more than 7 years if it's foreign loans. And both are on the last day of the year. Guys, this is section 35D. But guys, if I'm getting it over 5 years, and what if these are 5 years? What if after 3 years I get amalgamated? Then in that case, the next company will take the next 2 years. So don't no problem. You will still get 5 years. That is 35AD done, 35DDA done, 35D done, 36 we've already done. Next. Yes, next is guys all around depreciation. So everyone, depreciation is very important and hence I decided to take it separately. So everything around depreciation is what we will take. Let's go very straight and very simple guys. Is depreciation an expense that is compulsory for every business? Yes, depreciation is an expense which is compulsory for every business and profession. There's a section called section 32 and in that 32(1) says you have to calculate depreciation. Yes, on assets. Yes. Guys, let's say I have a computer which is of 1 lakh rupees. Will I get depreciation on that? Furniture, yes. Land and building, yes. Capital, all assets I will get depreciation, but there are some conditions first. There's a twin test which you should satisfy. What is a twin test? Twin test basically means you should own the asset. That means only if it's your asset then you will get depreciation, and second, it should be put to use. Guys, this word is very unique to depreciation. What do you mean by put to use? Put to use means it should be either used or intended to be used for business purposes. Example, this AC behind me, is it being used for business purposes? Yes, but there's a fire extinguisher also in my office down. Guys, is that fire extinguisher used every day? Do I or the staff, whenever we leave, do we spray the fire extinguisher and then we leave? No. So even if it's passive use or active use does not matter. It has to be put to use and there should be ownership. Then I can take depreciation. Yes. Guys, why don't I take high depreciation? Because the higher I take depreciation, the higher will be my expense, the lower will be my income, and the lower will be my income tax. So why can't I take really high depreciation? The government says, Income Tax Act says sorry, you will only be able to take depreciation as per the rates given in the Income Tax Act. But in accounting, you could take any depreciation. No, we don't follow accounting. We follow fixed rates which are given in the Income Tax Act. You can't take more, you can't take less. So what are the rates? The rates are given in 4 categories. First is for land and building. Next is for furniture. Next is for plant and machinery. And last is for intangible assets. For land and building, example, this office, what is the rate of depreciation? 10%. If this was a temporary shed, because it goes away very easily and fast, 40%. And what if this was a residential building used by business purposes to keep their employees, etc., then 5%. Furniture also, guys, the main rate is 10%. Intangible assets is 25%, but guys, news, goodwill is now not going to be depreciated. No depreciation on goodwill, excluding goodwill, everything else at 25%. And what about plant and machinery? There are many rates here, so watch out. For plant and machinery, the general rate is 15%. Example, most plant and machineries like the AC behind you will be depreciated at 15%. But guys, if it's computers or laptops, etc., then 40% because they depreciate very quickly. If they are books like annual books, periodical books, publications, and again there are 40% because they depreciate very quickly. Ships go slow, so 20%, but airlines go very fast, so airlines get 40%. Next, if there is any life-saving medical equipment, guys, thermometer is not a life-saving medical equipment. Account depreciation should be disallowed, ID depreciation be allowed, absolutely right, Bhagishri. In the exam, if they give you depreciation, then they say that this is as per books or accounts, you have to correct the wrong and make the right depreciation. Guys, any oil wells, etc. at 15%, windmills, which are good for the environment, 40%. Pollution control equipment, which are good for the environment, 40%. So I'll just give you a very, very good shortcut, guys. Anything that changes fast, like laptops, books, 40%. Anything that is necessary, like life-saving medical equipment or any pollution control equipment, all that is also at 40%. X-ray is not life-saving. Guys, they will in the exam give you life-saving medical equipment. You don't have to guess. We don't have to become doctors. All right, perfect. I hope that is clarified. If they say only medical equipment, then 15%. If they say life-saving medical equipment, then 40%. Perfect. So guys, these are the income tax rates. Can I take lower rates some years because I want to show higher income? No. Can I avoid depreciation some years? No, guys, you have to take depreciation every year. Now, guys, depreciation is basically taken based on when you put the asset to use, especially for new assets. So let's say I bought a new laptop and I put to use it today, that is 15th August, then I will get full year's depreciation. So do I have to calculate the number of days? No. If you put it to use by 3rd of October, by 3rd of October, that means even 3rd of October, yes, or including 3rd of October, if you put it to use by this day, then you will get full depreciation. Today is before 3rd of October. But guys, if you put it to use on or after 4th October, or later, if you put it to use, then this year you will get half year's depreciation, and next year you will get the balance full year's depreciation. Only medical equipment is 15%. Life-saving medical equipment is 40%. All right. Guys, this is only in the year of purchase. In the year of purchase, if you purchase and put to use, the word is put to use, guys. Purchase does not matter. The word is put to use. If you put it to use by 3rd of October, full year. If you put to use on or after 4th of October, then half year. Guys, a smart businessman will not purchase any asset on 4th of October. If he wants to purchase, only purchase and put to use before that, so you'll get full year's depreciation. All right. So this is half year, full year. And guys, if you're getting amalgamated, then which company will get? Will the previous company will get, or will the new company get? So this way is very simple. You will calculate normal depreciation like it amalgamation never happened, and whatever is the depreciation, let's say the depreciation is 100, then it will get bifurcated between the two entities based on number of days of usage. So if one particular asset has been used for the whole year and one entity has used it for 100 days, the other entity has used it for 265 days, then bifurcate it. And if the asset has been bought, let's say on 1st of October only, and one entity has used it for, let's say, 100 days and balance the remaining the next entity. So basically you have to bifurcate it based on number of days in case of amalgamation, etc. Proportionately based on number of days. Absolutely right. All right, so this is very important from an exam perspective, guys. Typically exam question, I'll tell you what happens. Typically they forget to write minus depreciation. Guys, is depreciation optional? Can you forget depreciation? No, guys, depreciation is compulsory. Every year you got to take depreciation. Can you take depreciation at different rates in the exam if they've taken depreciation at different rates? No, you will have to add it again and minus the depreciation as per income tax rates. All right. Now guys, how do you depreciate? Because let's say a company like Wipro, guys, has lakhs of laptops. So will they depreciate one laptop when it's bought, etc.? No, they use a family method, guys. There's a method called family method. I call it the family method. Actually, it is called block of asset method. Now, what is this block of asset method or family method? They say if all the assets which belong to the same category, there are 4 categories, guys. If you belong to the same category, and in that category also if you belong to the same rate, then you will be under one block. So please tell me, all the laptops, will they be under one block? Yes, because same category and same rate. So you will have an opening value or opening balance. Let's say of lakhs of laptops, the opening balance is 100 crores. Let's say this year you purchase some laptops and you put it to them for the whole year, then 40 crores will be added. And what if you sold some laptops, guys? If I sell laptops, I'll have to calculate profit and loss. No, you don't have to do that, because in a family method, you don't focus on individual asset sale. You will just, whenever you sell the assets, let's say some laptops were sold for 5 crores, you have to just minus that from the family. So 100 plus 40, let's say plus 45, or let's say 100 plus 55 minus 5 is basically 150 crores. and on that 150 crores I will multiply this by 40%. So this is basically a one shot calculation, guys. You don't have to calculate for one laptop. This is one shot calculation. Again I repeat, this is block of asset method, same category and same rate. You take the opening block, whatever you have purchased you will add, whatever you have sold you will minus, and in the final closing balance you will calculate depreciation. But guys, only one catch. What if the purchases are made, guys? Let's say this entire purchase was made on or after 4th October. Then in that case, guys, what will you do is you will finally calculate this 150 and you will bifurcate it. On 100 crores, you will do full year's depreciation, and on the balance 50 crores, you will do half year's depreciation. Or, sorry, my bad. On the 55 crores, assuming 55 crores has not been sold, you will do half year's depreciation, and on the 95 crores, you'll do full year's depreciation. Guys, if it's purchased and put to use in the next year, then this year you will not get depreciation, because as you know, the twin test, it has to be put to use. If it's not put to use, you will not get any depreciation. All right. Again, I repeat, guys, what if this was purchased, but 30 crores was purchased for the full year and put to use for the full year, and 25 crores was purchased and put to use for half a year? Then how do you calculate? Final amount is 150. You bifurcate the 150, guys. 25 crores you get half year, and the balance 125 is the full year. That's how you have to bifurcate it, guys. So you don't need to do individual assets at all. Perfect. So this is the family method. This is block of asset. This is the family method, and this is block of assets. Let's check what else is there, guys. By the way, this method of depreciation that we employ is called WDV. 3212 is what we depreciate, so we have to follow WDV. Yes, everyone, including Unacademy, has to follow WDV. So can no one follow SLM? Yes, SLM can be followed. 3211, it can be followed by only power generating, power distribution and power transmission companies, and that too it's optional if they want. But why will a person not want to follow SLM? It is so simple in accounting to SLM. But guys, in SLM you have to focus on one asset. Imagine a power generating company having millions or lakhs of assets doing 1111 depreciation. This is not the rightful method. So hence most companies in India follow WDV method. This is depreciation. Guys, depreciation is great to encourage you to buy new plant and machinery. The government has introduced a concept called additional depreciation. Guys, we all know what is additional. Jio right now, let's say a Jio or Myntra or Flipkart is having 30% discount. But if you use an Axis Bank credit card, you'll get 10% more discount. Is that additional discount? Yes. Same way, this is additional depreciation under a section called 32(1), 20% additional. That's the shortcut. So they say that if you buy new plant and machinery, only plant and machinery, yes, not furniture, not land and building, not intangible asset. Even in plant and machinery, not motor vehicle, not office appliances, not any ships, aircrafts, etc. So only for new plant and machinery, example, those which are used for manufacturing purposes, because additional depreciation is only given to people who manufacture or generate, distribute, etc. power. Only to them and only for new plant and machinery, additional depreciation is given of 20% over and above, guys, the normal depreciation. So let's take, you bought a new plant and machinery for 1 lakh, and this is something that is used in the factory. You're manufacturing, it is basically a plant and machinery which is used in the factory. Will you get depreciation? 15,000? Yes. And will you also get additional depreciation? 20,000? Yes. So the balance is 65,000. This is DEP and this is additional DEP. But guys, what if this asset is put to use on or after 4th of October? Then both will become half. So this will become 7,500 and this will become 10%, that is 10,000. Guys, is additional depreciation given every year? No, it's only a one-time 20% depreciation. So if you get 10% this year, then what about the balance 10%? You will get it next year. So this is called additional depreciation. Quickly recapping, the section is not important, but remember 20% additional. This is not given on furniture, on land and building, on intangible, on a motor vehicle, on office appliance, on ships and aircrafts, only on plant and machinery. That too, it should be new plant and machinery. What if it's new in India, but it was used abroad? Then it will be considered second-hand, guys. This is second-hand plant and machinery. It should be new, completely new, anywhere in the world also. Yes. Only, guys, in 35 AD. Now that I've discussed this, I can discuss 35 AD. In 35 AD specified business, you get 100% reduction of capital expenditure. There, the capital expenditure on plant and machinery can be second hand up to 20%. All right. So this is 32.1.2a. 4 categories of assets, twin test, and depreciation rates we've discussed. Intangible other than goodwill, half year, full year amalgamation, additional depreciation we've discussed. Power generating, land, guys, is never depreciated, that you should know. Additional depreciation. Yes, and on things which you already got 100% reduction, like scientific research asset or specified business, if you already got 100% reduction, you will not get any further depreciation. All right. Now, guys, there's a concept. 32.1 speaks about depreciation. Let's say your depreciation for the year is 60 lakhs, which is great, but your profit is only 50 lakhs. First, you take your income, you minus all the expenses except depreciation, and what is the balance profit? After all expenses except depreciation is 50 lakh. Can I minus depreciation of 60 lakh? No, you can't. You can only minus it till the profit. So depreciation you have to minus right in the end. Yes, only 50 lakh. So what about the 10 lakh depreciation? The 10 lakh will be called unabsorbed depreciation. This is like a cake, guys. If you call a huge cake at home and if you're only 3 people, can you finish the cake? No. So can you carry it forward? Yes, same is unabsorbed depreciation. You can carry it forward for how many years? For indefinite period. Basically, the cake will never get bad. You can carry it forward. Next year, if your profit is, let's say, 75 lakh, and next year, if your depreciation is 50 lakh, can I minus this 10 lakh next year? Yes. This is called section 32.2 unabsorbed depreciation. All right, guys, we also saw block of asset. For SLM, guys, I'm just giving you something that is not important. For SLM, let's say you bought an asset for 1 lakh rupees, and let's say the depreciation rate, or it's going to be lasting for 10 years. So every year 10,000. So next year your value is 90,000. Again 10,000 depreciation next year, so its value is 80,000. Now if you sell this asset for 85,000, are you making a profit? Yes, that is called balancing charge. Not important at all, guys, because SLM overall is not important. And if you sell an 80,000 asset for 85, it's called balancing charge. That is a profit. Yes, it's a profit. And if you sell an 80,000 asset for 78,000, then is there a loss? Yes, that loss is called terminal depreciation. This will be debited to P&L account. This will be credited to P&L account. 5,000 and 2,000 will be debited and credited respectively. I repeat one last time, SLM is not important, but if you buy an asset on SLM and you depreciate it, and if you sell that asset, if you sell it for profit, the profit will be not called profit. It's got a pet name called balancing charge. And the loss will not be called a loss. It has a pet name called terminal depreciation. All right. Now, guys, very, very important. Pay attention to something on the screen. Guys, do we all want depreciation? Yes. And do we want higher depreciation? Yes. How can we get higher depreciation, guys? Because the rate is constant. We can't change the rate. But what we can change is the cost of the asset. If the costs are increased, the depreciation will also increase. And the government knows it that you can manipulate the cost, and hence they've given a section called section 43 for cost of the asset. So what should be included in the cost of the asset? Let's take an asset, guys. Let's say you're importing some machinery from Germany. What all will be included in the cost of the asset? Let's say the cost price is 60 lakh rupees. Will it be included? Yes. The transportation cost, the freight, the installation, the training, etc. All the costs incurred till the asset is put to use, will it be also added? Yes, all the costs incurred till the asset is put to use. Let's say all the different costs are 10 lakh rupees. Will it be added? Yes, it will be added. So the cost of the asset is 70 lakhs. So section 43 says that all the costs associated with the asset will be added. What if you paid in cash more than 10,000 per person per day? Then that will not be added. Example, you Infosys or Wipro bought a laptop for 40,000 rupees and they paid in cash. Can they add it to the family? No guys, cash is not allowed. Expenditure also not allowed, and capital asset also not allowed. That means you can buy it, but it will not go to the asset. And so you will not get depreciation on it if you pay in cash. Alright, anyways, coming back to cost of the asset, cash will not be included in the cost. All the costs incurred will be added to the cost of the asset. I want to specifically talk about 3 costs. Guys, can you take a loan to buy an asset? Yes. And on the loan, do you have to pay interest? Yes. Even the interest up to putting the asset to use, let's say you put the asset to use today, 15th August, all the interest up to 15th August, let's say the interest up to 15th August is 2 lakh. Will you add it to the cost? Yes, it will be added to the cost. What about the interest after 15th August? That you will not add to the cost of the asset, that you will debit to the P&L. Guys, very, very important this concept is. If you're not understanding this, then it's a big gap in your understanding. So you got to understand this really well. It's very logic. Till 15th August, guys, that's your watermark date. Till 15th August, all the cost, including interest, yes, including interest, will be capitalized. Capitalized means added to the cost of the asset. After this day, then don't worry. After that, you can debit it to P&L account. Next, guys, what if you paid some customs duties or import duties, etc., on which you've not got credit? If you don't get credit, no credit, then let's say you spent 1 lakh rupees on customs duties. So will you add that also? Yes, that also, because that is also cost of the asset. But what if you can take credit? If you can take credit, then 1 lakh will not be added. And last, guys, what if the government gives you a 10% subsidy on the cost of this asset? Example, on 60 lakh, they're giving you a 6 lakh subsidy. Then you have to minus that because that you are not incurring. So that you have to minus. Excellent answers, Bhagyashree. The others also, I hope you're understanding. Rinal, Bhagyashree are answering. The others also, I hope you're understanding. Guys, this is the concept of cost of asset. Cost of asset has other aspects also. I'm going to discuss just one more aspect, guys, and that's all that is important at CA inter level. So interest will be added. Customs duties for which credit is not taken will be added. Subsidy will be minused. All other costs will be added. And if you paid in cash, it will be ignored. Now guys, I have a second-hand car which I have introduced in my business. I bought the car for 5 lakh rupees, let's say 2 years back. And now I'm introducing this into my travel business. I'm opening a tour and travel company and I'm introducing this in my business. Is this my asset? Yes. So how much will I add to my block of asset? Guys, I have used it for 2 years, but I have not claimed any depreciation because depreciation you can claim only if it's business and profession. For 2 years, I did not use it. It was my personal car, so no depreciation. So the government says, listen, you can take it at the original cost. So that means when I introduce in my business, will I add it to my asset at what price? The actual cost, the original cost? Yes. The ICI exam will confuse you by giving a market value. The market value today is 4 lakh. But no, not 4 lakh, it will be added at actual cost, that is 5 lakh. Only one exception, guys, to this original cost. What is that exception? If you buy a building and if that building you introduce into your business, let's say instead of this car, I had bought a building for 50 lakhs and I'm introducing that in my business now, that building as my office. Then in that case, will I take the original cost? No, you will take the cost minus notional, that is assumed depreciation. So depreciation is 10%, so you will take 10% for 2 years and that is what you will add to the cost of asset. Is this complicated? Yes. But so is tax, guys. Sometimes it gets complicated, but these are not the most important concepts. Very simple. Just assume all the cost will be added, including interest, customs duties. Even a second-hand asset will be considered original cost because earlier you had it for personal purposes, so you did not claim depreciation. But only building, there will be notional depreciation. Yes, guys, that is it on deductions. All right. Now disallowances. Guys, again for disallowances, you don't need to remember the section unless it's a very important disallowance section. So remember poor wins cash income. The same thing is also in PGBP. In PGBP, if you pay income tax, will you be allowed a reduction? No. Is section important? No. Besides income tax, if you pay GST, municipal tax, all that is okay. What if you pay in cash? Not allowed. Up to 10,000 per person per day allowed. More than 10,000 per person per day not allowed. ICI exam will confuse you. They will give you exact 10,000. Is exact 10,000 allowed? Yes. More than that is a problem. Guys, this has some exceptions. Check out the exceptions, guys. Here we go. First, if you're paying to a goods transport company, then up to 35,000 is okay. So for goods transport, this 10,000 becomes 35,000. And also there is a rule called Rule 6DD, whereby they say that if you're paying directly to a farmer or someone who's selling fish or someone who's doing animal husbandry or someone who's doing dairy directly to these people, not to middlemen, then it is allowed. Even if it's more than 10,000, yes. If you're paying to a cottage industry without who is not using power, then it is allowed. If you're paying to someone in a village without banking facilities, then it is allowed. If you are paying to your employee, your slave, any retirement benefits up to 50,000 rupees, then it is allowed. Example, the peon in your office is retiring and you're paying him some gratuity of 40,000, it is allowed. If you're paying a slave or your employee who is out of office for more than 15 days, he's out of office for more than 15 days and he's in a place without banking facilities and you're paying him salary, is that allowed? Let's say his salary is 60,000, you're paying him 60,000 in cash. Your branch, let's say you are in Bangalore or in Mumbai, but he's your slave or your employee is traveling to a very remote village where you have a branch and you have to pay him salary. Will that be allowed if it's paid in cash? Yes, provided TDS has been deducted. Important? Yes, guys. Rule 6DD are some exceptions where the government is very sympathetic and they say that you can be paying cash more than 10,000 and it will be allowed in these cases. Salary more than 15 days, outside office to a slave, but TDS should be deducted. Retirement benefits to the employee up to 50,000. Village with no bank allowed. Cottage industry without the use of power allowed, and direct payment to these people allowed. Guys, earlier we had a concept of on a banking holiday, like today, guys. On 15th August, if you pay, or a banking holiday you would pay, it would be allowed. So people would do all their cash transactions on today day, at least on paper. So hence the government removed this. Now even on a banking holiday, it is not allowed. So you have to wait for the next day and make the payment in other than cash. Guys, just 1 second. Perfect. Next, guys, winnings is not in PGBP, it's a part of IFOS. This cash section is important, guys. For cash, it's section 40A3. There's a section for cash. And guys, if you've already debited the expense and now you are discharging the liability. Guys, you debited the expense. You had to pay 30,000 to someone for repair expenses. You debited it, and now you are paying the 30,000 in cash. Even that will be disallowed. So whether you pay cash directly or you discharge a liability through cash, both will be disallowed. Next, if you pay to some specified persons, excessive or unreasonable. Guys, the same thing was in IFOS, but in IFOS it was basically to related persons. Here it becomes to specified persons. What are specified persons? Specified persons basically depends on who you are. If you are an individual, then specified persons means your relative or anyone whom you hold substantial interest in, or anyone who holds substantial interest in you. If you are an HUF, then your members, and again substantial interest both ways. If you are a partnership firm, then the partners and their relatives, again substantial interest both ways. If you are a company, then the directors and their relatives, and again substantial interest both ways. So guys, these are people who are specified persons. So if you pay specified persons, anything unreasonable or excessive, guys, remember, earning is not a problem. If you earn excessive, the government has no problem. Only if you spend excessive or unreasonable, then the government has a problem. So this is R is excessive or unreasonable. Personal expenses are not allowed. And guys, O and R, these are important. If you remember the sections also, it will be good. Let's see what is this OOR. Guys, you need to deduct in TDS. You need to deduct the TDS during the year. So if your year is 21-22, then you need to deduct it during the year. Yes, you need to deduct it during the year. What if you were supposed to deduct it on 15th August and if you deduct it on 20th August, is that a big problem? Yes, interest maybe, but not a big problem because you still deducted it during the year till 31st March. And guys, whatever you deducted has to be paid, but for payment you have some extra days. You can pay it till the till the return filing due date. Return filing due date is generally 31st July for most people. For big fish, it is 31st October, and the biggest fish, it's 30th November. So till your return filing due date, you can pay. So guys, for deduction, it is during the year, and for payment, you have a slightly extended due date, return filing due date, and both have to be done. Only then you will get a deduction. Guys, you will clear CA Inter only when group 1 and group 2 both are cleared. Same way, you will get a deduction only if you deduct also within the year and pay also by the return filing due date. Let's take an example, guys. You paid some amount today, 15th August, but you did not deduct. Today you did not deduct, you deducted it on 4th April after the year. Then sorry, you will not get a deduction this year, but you will get a deduction in the year you deducted and paid. What if you deducted it properly during the year, but you paid it after the return filing due date? Then again, you will not get the deduction this year, but you will get in the year of payment. So remember guys, both of these have to be done. One has to be done during the year, one has to be done till the return filing due date. If both are done, only then you'll get the deduction this year. Otherwise, you'll get the deduction in the year of payment, not next year, in the year of payment. So this is disallowance. Yes, this is disallowance. But there are two kinds of disallowance. If you pay to a non-resident and you don't deduct or you don't pay, then 100% will be disallowed. But don't worry, whenever you pay, you'll get the deduction. And if you're paying to a resident and you don't deduct or pay TDS, then 30% will be disallowed. But don't worry, again, it will be allowed in the year you pay. Let's take an example, guys. You were supposed to pay to someone for repairs 2 lakh rupees. You did not deduct or you did not pay the TDS. How much will be disallowed? Assuming this is a resident, how much will be disallowed? Calculate 30% of this and disallowed. 30% of 2 lakh, guys, is 60,000. 60,000 will be disallowed. Alright, typically guys, this is a stage where people start getting very bothered by PGBP, and this is the stage that other people get filtered in. Because guys, if you can't pay attention and if you can't push yourself to understand these concepts, then CA Inter is a distant dream. Trust me, they will question you not on the sections. Don't get so bothered by the sections, but on the concepts they will definitely question you. This was a question in the May exam recently, that they made a payment on which they did not deduct TDS. So you will get the deduction, but 30% will not be given to you. Alright. Okay, so I'm looking at more disallowances. So this was TDS. If you want to remember the section, guys, the section for 100% is 40A1 and for 30% is 40A1A. If you pay outside India or to a non-resident, but you pay salary and you don't deduct on that, then it's a permanent disallowance. That means this year, next year, never you will get. So that's a permanent disallowance only in case of salary. All right. Guys, if you want to be a politician and you pay for advertisement or souvenirs in magazines of political parties, this sounds like a legitimate deduction because you're paying for advertisement, but because it's in political party, the government says, sorry, we'll disallow it. Next, guys, is a section which is very important, section 43B. Here the government says, we don't care which method of accounting you are employing, but this deduction you will get, or these deductions you will get only if you pay. So show me the money and take the deduction. By when do you need to pay? Do you need to pay tomorrow? No, you can pay till the return filing due date. That means for the year 21-22, you can pay till the return filing due date. What if you don't pay by that day? Then this year you'll not get the deduction. Then it's gone forever. No, whenever you pay later, you'll get the deduction. So this is basically on payment basis. Yes, on payment basis. And what is the shortcut for this? The shortcut is TREE. TREEI. Any taxes that you have to pay to the government, like municipal tax, GST, do you want a deduction? Yes, show me the money. Any railway assets or railway payments for, let's say, transportation of goods, etc., do you want a deduction? Yes, show me the money. Any payment that you are making for employees bonus and commission, show me the money. Any payment that you are making for employees provident fund, gratuity fund, etc., show me the money. But you don't need to show me the money today. You can show me the money by return filing due date. And if you are paying for employees leave encashment, then again show me the money. If you are paying interest to banks, you want a deduction? Yes, show me the money. Financial institution, show me the money. Public financial institution, show me the money. If you are paying interest to money lender, then don't show me the money, take the deduction. If you are paying interest to a friend, don't show me the money, take the deduction. If you are paying electricity expense, salary, etc., don't show me the money, take the deduction. So only in this case they say show me the money and take the deduction. If you don't show me the money, you will not get the deduction. This is section 43B. Guys, I have to pay interest of 5 lakh to SBI for my business. I'm Vijay Malia. I have to pay 5 lakh rupees to SBI for my interest. Guys, do I have to show the government the money? Do I have to pay this amount? Yes. Only if I pay will I get a deduction. But what if I tell SBI, listen, convert my interest into another loan? No. Cancel this interest, convert it into a loan of 5 lakhs. Then guys, have I paid it? No. So I will not get the deduction. Only how much ever you show, how much ever you pay, you will get the deduction. All right. Yes. Guys, a few sections left here. Let me just talk about those few sections which are left in disallowances. If you make any random provisions, basically you have a lot of profits. You don't want to pay so much tax. So you make random provisions like annual party provision, Holi party, Diwali party. The government says, listen, we will disallow any provisions, guys. In accounting, can we take provisions? Yes, accounting is all about provisions, but in income tax, guys, provisions are not allowed at all. That's why only actual bad debts can be taken. Provision for bad debts cannot be taken. So in the exam, if you have any provision, sorry, you will not get a deduction. And if you contribute to unapproved gratuity fund, then in that case you will not get a deduction now, but when you pay the employee, pay the slave, that time you will get the deduction. All right, perfect. Guys, now going to some small different concepts, but first I'll just park those concepts here. There is 43 CA and there is 40B. We will discuss that in 5 minutes, but first guys, let's now go to a concept that we've already done, composite income. Guys, if you're in the tea business or coffee business or rubber business, or if you're transferring tomatoes to a ketchup factory, in these cases, guys, how much will be PGBP? 40% PGBP, 40%. Sometimes in coffee, if it's only grown and cured, then 25%, rubber 35%, and then transfer should be at market value. This we've already done when we did a chapter called agriculture income. All right. Now guys, while we discuss PGBP, in house property or in IFOS, I did not talk of maintaining books of accounts, but in case of PGBP, you might have to arrange your accounts. So let's see who has to arrange their accounts. Is arranging accounts expensive? Yes. So not everyone has to arrange their accounts. Is this an important section? Not at all, guys, but I'm doing it because it is part of our syllabus. So if you think about professionals or professions, that means anyone who has a degree like doctor, CA, lawyer, architect, etc. Then for professions, they have to arrange accounts if in all the 3 preceding years, not this year guys, not this year, but before this year, in all the 3 preceding years, if your turnover is greater than 1,50,000, then you need to arrange your accounts. How do I remember this, guys? You have to remember 1,50,000 turnover, but the government loves all professionals, and hence in the last 3 years, all. That means in the last 3 years, if my turnover is 2 lakh, 2 lakh, 2 lakh, then do I have to arrange my accounts? Yes. But if it's 1 lakh, 2 lakh, 2 lakh, then this year do I have to arrange my accounts? No, because in all the 3 years, it should be more than 1.5 lakhs. Good answers there, Rinath. Others also can participate if you remember anything. For business, guys, what is business? Business basically is other than profession, everything is business. In this case, you need to arrange accounts if in any year, guys, it all changes to any, in any of the 3 preceding years, your turnover was more than 10 lakhs or your income, that is your profit, is greater than 1.2 lakhs, then in this case, this is or, that means if your turnover goes more than 10 lakh or your income goes more than 1.2 lakh, any of these cases you will have to arrange your account. So what changes here, guys? First, all becomes any, and then turnover 10 lakh or income 1.2 lakhs. But for individuals and HUF, guys, this limit is very low, honestly. Even the guy who sells cigarettes at the corner of your lane, guys, he must be doing turnover of more than 10 lakh. 10 lakh is a very small amount nowadays, and hence for individuals and HUF, they say that for you guys, the turnover and the income limit will be different. Turnover greater than 25 lakh and income greater than 2.5 lakh will be your limit only for individual and HUF. This is the concept of arranging accounts, guys. And if you are supposed to arrange accounts, then every year's accounts you have to maintain for 6 years. Example, this year I have to keep those accounts safe with me for at least 6 assessment years. The next section is very, very important, guys. Watch it. The next section is audit the books. It's a very expensive section because here you need to go to a CA. You need to tell him, listen, check my books of accounts, please audit it, please check me. Guys, who needs to get their audited accounts audited or audit the books? Here we go, guys. Only big fish. What is big fish? If you are into profession, that means anyone with a degree, doctor, CA, lawyer, etc., then you will need to audit the books only if your turnover is more than 50 lakhs. So in the year, if you're a doctor and during COVID your turnover was 55 lakhs, will you have to go to a CA? Yes. And will you have to give him your books of accounts? Yes. So 44AB means 44A should automatically happen. Guys, your CA paper, if you don't write, examiner they cannot check. So hence, again, your books of accounts, if you don't write, how will the auditor check you? So 44AB means that 44A is applicable. And for businessmen, you will have to go and spend money with an auditor only if your turnover is more than 1 crore. But guys, this is a very small limit, 1 crore. Honestly, with inflation, very small businesses also have more than 1 crore. So the government says, okay, we will increase this limit only for some people. So this limit is increased to 10 crores only if your cash receipts and your cash payment, and both your cash receipts and your cash payments are very low. How low? Your cash receipts divided by your total receipts are maximum 5%. That means you're receiving cash. I'm not saying you can't accept cash. You can accept cash, but only maximum 5% of your total receipts. And your cash payment divided by total payment, here also it should be maximum 5%. That means, guys, they're not saying you cannot accept cash. You can, but only up to maximum 5%. So in the exam, if they give you that Unacademy, will they have to get their books of accounts audited? Yes, because your turnover is more than 1, more than 10, you don't have to think also. But they say that you're a businessman, let's say you sell calculators, and your turnover is 90 lakhs, will you have to get audited? No. 9 crores, you'll have to get yourself audited, depends. Guys, so first for audit, whenever you have to check, first establish the limit. Limit is 1 crore, yes, but if your cash transactions are very low, then your limit might be 10 crores. CAs hated this amendment because a lot of our clients were in 1, 2, 3, 4, 5, 6, 7, 8, 9 crores, 10 crores. And now they don't have to get audited. Because of this provision, they don't have to get audited. Guys, audit means going to a CA, paying a fee, etc. So audit is a painful process and it can be avoided if you're a small fish. Guys, please tell me, companies like Adani, Reliance, Adani, Mahindra, Tata Motors, can they avoid an audit? No, they can't avoid an audit. They are big fish and they can't avoid an audit. So that is 44A, 44AB. We'll look at this 44AB slightly in more detail, some more points, but after a while. Guys, this is 44AB for you all. But guys, I don't want to arrange my accounts. I don't want to employ an accountant. I don't even want to get my books of accounts audited. I don't want to go to a CA. I don't want to spend that kind of money. The government says, listen, then you're the perfect person for presumptive income. Presumptive income basically means that you tell us your turnover. You just tell us your turnover. We will presume or assume your income and you pay the tax on that. All right, so that's a very good thing. So the section is 44AD, assume deductions. This is applicable only if you are a businessman. Yes, not for profession. This is only for business. And only for small businessmen. That means if you're an individual, if you're an HUF or you're a partnership firm. Not even an LP, no, not even an LLP. And this you can take only if your turnover is up to 2 crores in that business. So guys, this person who's selling these calculators, as he's an HUF, can he take this scheme up? Yes, if your turnover is up to 2 crores. And this is only available to residents. So these are some conditions, guys. What are the conditions? First, You should be an individual HUF partnership firm, not even LLP, no, not even an LLP. Your turnover should be up to 2 crores. You should be a resident, and congratulations if you fulfill these conditions. What are the benefits? First, you don't have to arrange your accounts. That is one benefit. Yes. Second, you don't need to audit your books of accounts. That's the second benefit. Yes. And most important benefit, whatever is your turnover, let's say your turnover is 1.8 crores. You can basically assume that 8% of that is your profit. And not just that, if you're getting money in your bank account, etc., then whatever amount you got in your bank account, you can assume 6% to be profit. So this is my profit assumption. Yes, you're presuming your income or you're presuming your profit to be 8 or 6%. Guys, can I show more profit if I want to? Yes, but don't show lower than this. If you show lower than this, then we'll want to check you. So you'll have to arrange your accounts and get them audited. All right, so this is great, guys. This is not available for professions. Professions, there is another section called 44 ADA. So professions will not go here. This is not available to goods transport agencies because they go under 44 AE, and this is also not available to commission agents, etc. Guys, this is 44 AD. Quickly recapping: small people, small businessmen up to 2 crores, residents. Whatever your turnover is up to 2 crores, 8% of 6%, 8% of cash, and 6% of others. Can I show more? Yes, you can happily show more. More is not a problem, guys. But if you want to show less, let's say it's COVID, you have a loss, no problem, show it. But you'll have to arrange your accounts and get them audited. And what about AD? Same thing, guys, but you are a professional here. So doctors, CAs can come here, yes. Again, you have to be an individual HUF partnership firm, not even LLP, no, not even LLP. Guys, your HUF also has been removed now. So please note here, HUF also has been removed. Your turnover should be up to 50 lakhs. That means you should be small, yes. Again, you should also be a resident, yes. So similar, guys, resident, small, 50 lakh is a turnover, here it's 2 crore. They say one benefit, you don't need to arrange your accounts. One more benefit, you don't need to audit your accounts. And last benefit, whatever is your turnover, let's say your turnover is 40 lakhs is your turnover, then this is just an example, guys. Then 50% of that should be your profit. Why such a high amount? Because, guys, professionals generally make more money, they have more profits, they have less expenses. So 50% is a profit. Can I show higher profit? Yes. But guys, here also, if you show lower profit, then I want to check you, why did you get lower than this profit? So you'll have to arrange your accounts and get them audited. 44 AD. Guys, here it is individual HUF and partnership firm. Only in case of professions, HUF has been removed. So Rinag, opposite of what you're saying is right. So in 44 AD, individual HUF and partnership firm, all three allowed, yes. But here now only two allowed, individual or partnership firms. All right. Guys, this is 44 AD. Please tell me in the exam if a question comes that this is a person who does not want to get his books of accounts audited, automatically will you go towards these sections? Yes. All right. And 44A is very different, guys. It is for a goods transport agency. But again, it is small. Small means it has to maximum own up to 10 goods carriages during the year, guys. What if it owns 11 for even one day? Then also it cannot be under this. To become a part of resumptive income, you should be really small. Small means up to 10 goods carriages. This is not for passenger transport, guys. This is only for goods transport. Here the good part is you can be a resident or a non-resident, does not matter. Everyone is allowed. Here you can be an individual partnership company. So all guys are welcome to this party. And here they say that if you have a light or medium vehicle, then 7,500 per month or part thereof will be my income. Example, if I have a truck which is light and medium, And if I use it throughout the year, then 7,500 into 12. If I use it only for 11 months, then 7,500 into 11. If I buy it on the last day of the year, 31st March, then 7,500 into 1, because even if it's part of the month, you will charge at least for the whole month. And what if it's heavy vehicle? What is first heavy vehicle? Heavy vehicle means more than 12 tons. Exact 12 tons is light and medium. More than 12 tons is heavy. Then in that case, you have to earn at least 1,000 per ton per month or part thereof. That means 1,000 per ton per month or part thereof. This is minimum, guys, if it's more than 12 tons. Guys, can you show more than this? Yes, you are welcome to show more than this, but you cannot show lower than this. I hope this is clear. Yes, yes, yes. Perfect. Guys, let me tell you some more things here. Guys, can you minus any more expenses from any of these? Can you minus some expenditure? Can you disallow? Nothing, guys. Everything is sorted here. No extra expenditures here because they've already presumed it to be 6, 8 and 50% in these amounts. Let's try and differentiate between them. This is for businessmen, professionals, GTA. Only resident, everyone. Only 3 people, only 2 people, everyone. 8%, 6%, 50%, 7,500 or 1,000. Can I show more? Yes. Can I show more? Yes. Can I show more? Yes. Yes. Do I have to maintain my books of accounts? No. No arranging accounts here also, here also, here also. Do I have to audit? No audit, no audit, no audit. What if I show less, guys? Then you have to maintain your books of accounts and get it audited. Guys, even if it's a loss, yes, you need to arrange your accounts and get them audited, arranging because they want to check whether you are basically lying or something. So hence you have to get your accounts audited and arrange your accounts. But audit you can avoid if your overall total income is not above your basic exemption limit. I repeat, guys, in any of these cases, if you're showing less than that, then do you have to get your accounts, arrange your accounts and get them audited? Yes. So both are necessary, yes, but only in rare cases, guys, you can avoid your audit if your overall total income is not above the basic exemption limit. All right. Guys, one very important section here, guys, 44AD is the best section in Income Tax Act. It's literally the best section, and anything best is addictive. So this, guys, has a chain rule. What is a chain reaction or the addiction is basically if you use it for 1 year, let's say for 21-22 you used it for the first time, then for the next 5 years you got to stick to this option. That means for the next 5 years, what do you mean by sticking to this option? For the next 5 years, every year you have to show either 6 or 8%. But what if in 1 year I'm genuinely making a loss, still then show 8 and 6%? This is a chain reaction. Once you take it up, for the next 5 years you got to take it up, no exception. What if I'm in dire need and I cannot take it up? What if it's the worst year of my business and I have a huge loss? Then in that case, if you don't take it up, we will give you 3 punishments. First, the year you break the chain, that year you have to arrange your accounts and get yourself audited for that year. Second punishment, from that year, the year you break the chains, from that year after 5 years, you cannot use 44AD for 5 years. So all the punishments start from that year. That year you will have to arrange your accounts and get them audited because you want to check how come you're making such a huge loss. For 5 years after that, you cannot take 44AD. And third, for the 5 years, because you cannot take 44AD, you will have to arrange your accounts and get them audited. These are 3 punishments of breaking the chain. Guys, this is section 44AD4, but you don't need to remember the subsection. 44AD is good. Perfect, perfect, perfect. Guys, this is 44AD. I'm just checking if there's anything left. 43 CA, 40B is left. Deemed income 41 is left. 44, audit the books, arrange the accounts. AD we've seen, ADA we've seen, AE we've seen. Perfect. All right. Guys, after all these things that we have seen, I want to gently remind you that in the exam, if you forget all the PGBP sections also, no problem. Just if you just remember one line out of PGBP, you will get 50% of your marks. If you just remember one line, that one line is any income of business and profession will go in business and profession head. And any expense in relation to that you can minus. Anything outside of that you cannot minus. If you remember just this one line, you'll get 50% of your marks because most of this is very logical. And also we forgot to discuss types of businesses. So these are 4 things that are left in PGBP, and then PGBP chapter gets over. Let's first discuss types of businesses. Guys, there are 3 types of business. One is normal business that I am doing right now. Teaching is a normal business. One is specified business, which we've already discussed. 35 AD is a specified business. So these both are very clear. What is the middle business? Is called speculative business. Actually, guys, there is nothing called normal business. This normal business, I'm just using a shortcut. It's called non-speculative. But this one is called speculative business. Speculative basically means you're buying and selling without taking delivery. Example, if I buy a share in the morning at 10 o'clock and I sell it at 11 o'clock, that is speculative business. Basically, without delivery is speculative. As you will tell me where to put which business. Unacademy. Unacademy is where, guys? Unacademy is normal business. A doctor. A doctor is where, guys? A doctor is also normal business. A 100-bed hospital. Where is a 100-bed hospital? A 100-bed hospital basically is specified business. What if you're day trading, buying shares in the morning, selling in the afternoon, intraday trade? Intraday trade is speculative business. But guys, very important, what if I'm doing all these complicated things, which you don't need to know, but you just need to know where it lies. If you're doing complicated things like derivatives, hedging, futures, options, forwards, guys, all the things that you don't understand, guys, these are very complicated things. Derivatives, futures, forwards, options, hedging, etc. All of these are normal business. So I'm giving you examples. You tell me, Motilal Oswal is doing hedging. Where will that be? Normal business. You as a student, some Instagram influencer taught you how to do futures and options. Where will that be? Normal business. Guys, I'm not getting the replies, so please, I'm going to ask once again, guys. As a student, you learned how to do futures and options. Is that speculative or is that normal? That is normal business. So futures and options, derivatives, hedging, forwards, all these complicated terms are normal business. But does it matter? Yes, it matters. In set off and carry forward, it matters whether you're doing normal business or speculative business. See, specified business is very simple. Speculative also, now it's very simple. And normal business, all these hedging, derivatives, etc. are all normal business. And one more example I want to give you, guys, what if you are doing intraday trading? Speculative business. But what if Bank of America, or let's say an investment bank, is doing intraday trading? Then it's normal business. Example, guys, what if you are buying and selling jewelry? Then for you it's an asset. But what if the jeweler is doing? Then it's a business. Same way, guys, there are 2 exceptions. I'm writing the 2 exceptions. This was an exam question, guys. All derivatives, whether it is futures, forwards, options, hedgings, etc., all of them are normal business. And intraday by investment banks, financial institutions, it's their normal business to do every day. So that is also normal business. So these 2 are normal business. Even though they might not look like normal business, they are non-speculative or normal business. Guys, taking a 5-minute here, we'll come back in 5 and we will continue. We'll finish this. We'll do PGBP questions also, and then we'll see what else we can do considering how much strained or stressed we are for the day. All right, 5 minutes and we'll be back. Thank you. Few things in PGBP and then it gets over. So we've just understood what are types of businesses. Now guys, we're looking at the next bit, which is also not too difficult, which is deemed income. Let me explain it in a very simple manner. There's a section which says section 41. If you forget the section, no problem. But it says that if you had to pay 30,000 rupees to someone for repairing your office, and that was a liability which you now don't have to pay, then is that your saving? Yes. So a liability which gets cancelled, that is deemed income. Next, if you have an SLM asset, guys, SLM assets are very uncommon in real life, but if you have an SLM asset, straight line method, and you've depreciated and it's now worth 80,000 and you're selling it for 85,000, then that 5,000 is balancing charge, it's a profit. So that profit is deemed income. So SLM asset, and this is balancing charge. So that is also deemed income. Guys, this is not really important, but I'll tell you the important part. The first one is important, but it's very obvious, guys. If you have to pay someone, let's say you paid Unacademy subscription, and now guys, they say, listen, you've done really well in your exams, you got a rank, you don't need to pay. Is that your saving? Yes. Next. Guys, here, there was a scientific research asset. If you remember scientific research asset, a microscope which you bought for 1 lakh rupees, if you get a deduction, you get 100% deduction. So if you decide to sell it, then the selling, if you let's say decide to sell it for 70,000, then that 70,000 has to be reversed in PGBP, which is section 41. Of course, if it's sold for 1 lakh 70, then 1 lakh in PGBP, 70,000 in capital gain. I hope that is understood. That is scientific research asset. Next, you had some bad debt. Some 7 people did not pay you 7 lakh rupees and now they're paying you some money. Is that bad debt recovery? Yes, that is also deemed income. So deemed incomes honestly are not actual incomes. They're only some savings, etc. Repeating, liability getting cancelled, important. Bad debt recovery, important. Scientific research asset you'll understand anyways, and SLM asset is not important from your exam perspective. That is section 41 done. Types of business is done. And now looking at the last 2 sections, this one is something that you'll already have a little idea about. Let's do 43 CA. So is there a lock-in period for scientific research assets sold? No, there's no lock-in period. Whenever you sell it, whatever you sell it at, it will be reversed up to the cost in PGBP above the cost in capital gain. All right. Guys, here we go. The second last bit. Guys, you are into a business of selling land and building. You are into a business and profession where you are involved in selling land and building. Let's say you're a builder or a construction company and you're selling an apartment where the stamp duty value is 1 crore, but you're selling it for 80 lakhs. Guys, does it sound familiar from yesterday's IFOS discussion? Yes. And there is this recipient here. Is the recipient getting a benefit of 20 lakhs? Yes. And can he or she or it may be taxed under IFOS gift taxation? Yes. We've already discussed this yesterday, so I'm not going to discuss it again today. But the idea behind this is no one gives a 1 crore house for only 80 lakh rupees. It means that you have paid some cash to the builder. You are saying you paid only 80 lakhs, but maybe you paid some cash to the builder. That is the assumption that the government has. While they tax you under IFOS and they've punished you indirectly, they now go to the builder, and we are in PGBP. So they tell the builder that, builder, have you sold a land and building? Yes. So please go to a CA and get this checking done under 43 CA. What is this checking? First, find out the stamp duty value. Okay, that is 1 crore. Then you take your sale consideration and multiply it by 110%. So basically 80 lakh into 110%, which is basically 88 lakhs. That means guys, if your stamp duty value is 1 crore and sale consideration into 110% is 88 lakh, they say your stamp duty value is too high. How can we believe you that you sold it at such a low price? So although you are saying you sold it at 80 lakh, we won't believe you and we will take the stamp duty value as the PGBP income. I repeat, the percentage is the same, 110%. They will multiply the sale consideration with 100%, yes, because stamp duty value you cannot touch. Guys, what if I change the number? What if the stamp duty value was 85 lakhs? Then is stamp duty value within the range? Yes, then we will believe you. So whatever you are saying, we will believe you. I repeat this one last time. This is only used in case of PGBP when land and building is being sold as stock. You will check it under a section called 43 CA, whereby you will take your sale consideration, which they are saying my sale consideration is 80 lakh, and you will compare it to the stamp duty value. If the sale consideration, if the stamp duty value is within that range, then we will believe you. If it is not within that range, then we will not believe you and we will take stamp duty value. So it's basically between these two values, the government will take one of them. Guys, this is an important section, but this also has a certain change which you already know, guys. If this house property, can we make this percentage 20%? Yes, you can, provided some conditions are fulfilled. This should be a residential house property. It should be a first time sale. The sale consideration should be up to 2 crores. And guys, this sale should happen between 12th November 2020 to 30th June 21. If these four conditions are fulfilled, then you can multiply the sale consideration by 120%. Let's check our understanding, guys. The exam says that you have sold a house for, let's say, 90 lakh. The stamp duty value is 1.02 crores. This is a residential house, up to 2 crores, all those conditions fulfilled. So will we check? Yes, we will check under section 43 CA. For the seller, we will check under 43 CA. We will take the sale consideration, that is 90 lakhs, and multiply it by 120%. So 90 lakh into 120% is 108. So 108 lakhs. And what is our stamp duty value? Stamp duty value is 102 lakhs. Is it within the range? Yes. So we believe whatever sale consideration you're saying, we'll believe you. But guys, what if this was an office building? Then you will change it to 110%, which is 99 lakhs. And your stamp duty value is 102 lakhs. So sorry, we will not believe you. We will take the stamp duty value as the sale consideration or as the PGBP income. Now, what if there are two stamp duty values, stamp duty value 1 and stamp duty value 2 on date of agreement and date of registration? And what if one of them is 95 lakh and one of them 102 lakhs? Which one would you want to take? I would want to take 95 lakhs. Because the lower stamp duty value is better. If this is 95 lakh, I will not have to pay any tax only, any extra tax. So hence I would want to take the lower one. But can you take the lower one? Yes, you can take the lower one if you can prove that some amount of money was received on or before this day by modes other than cash, other than bearer check or DD, or other than cross check or DD, other than that. So this is similar to IFOS concept. Yes, here also there is 110%, or you can take 120% also, same conditions. Yes, same conditions, but there it was from the receiver's perspective and here it is a seller's perspective, but the idea is to cash the cash transaction they want to catch and they want to tax. And guys, 40B we will do tomorrow. I don't want to pressurize you with 40B right now, or actually let's finish it only. It's only a small concept. Let's finish that. Guys, please tell me, Reliance Industries, can they pay Mukesh Ambani as much salary as they want? Yes. Guys, there is no restriction on how much of a salary they want to pay a good employee. And can they pay a bank like Yes Bank? Can they pay 12% interest, 15% interest, even 18% interest? Yes. There is no restriction on people paying interest or people paying salaries. Guys, we often hear IIT graduates getting 2 crore rupees salaries. So that means anyone can pay any amount of salary, guys. There is no restriction, except the restriction is as under. If a partnership firm is paying salary to the partners, or if a partnership firm is paying interest to a partners, there is a restriction on that. So this is a section called section 40B, which talks about how much salary or interest can be paid. This restriction is only when it's paid by a partnership firm to its partners. Let's check first interest. So they say, can a partnership firm pay interest to its partners? First, let's get to that. Yes, guys, partners do pay capital. So this is a partnership firm. And can they pay interest to the partners? Yes, they can pay interest to the partners. But the government has put a certain restriction under 40B. What is the restriction? That the maximum interest you can pay is 12%. That means what if the partner has contributed 10 lakh? Then how much can I pay maximum? 1.2 lakhs per annum. Yes, 12%. What if I'm paying more? Even if you are paying more as a partnership firm, you will get a deduction only of 12%. That means, guys, can I pay 1,50,000? Yes, you can pay even 2 lakhs, but you will get a deduction only of 1.2 lakhs. So interest maximum 12%. Sir, in the Mukesh Ambani example, won't managerial remuneration restrictions apply? Gaurav, let's try to look at the concept why I explained this. The reason I explained that is not to go into other complications like you are getting into. Don't do that. Try and focus on what I'm trying to say. I'm trying to say that only this restriction applies only when a partnership firm pays to a partner. Please, I hope that is clear. Yes. So in the exam, guys, can Infosys pay any amount of salary to an IIT graduate? Yes. Can tomorrow when you become a CA, can Aditya Birla Group can pay 35 lakh rupees to you as a starter CA? Yes, why not? But only when a partnership firm pays interest and salary to a partner, only then restrictions will apply. First, talking about interest, how much deduction? Maximum 12%. Does it have to be authorized by the partnership deed? Yes, it has to be authorized in the partnership deed that you are paying interest. What if the authorized in the partnership deed is 15%? Sorry, you cannot authorize more than 12%. It has to be authorized, but maximum 12%. Can you authorize it from today, 15th August? Yes, but can you retrospectively pay? No, you cannot retrospectively pay. No retrospective payment. And last, guys, you can pay interest only up to the profits. That means, what if your profits are only 1 lakh rupees? Then can I pay at least 1.2 lakh? No, sorry, you can pay, but your deduction will be maximum only up to the profits. I quickly will recap this. Please tell me, guys, yes or no. Can I pay to SBI 18% interest? Yes. Can I pay to a money lender 27% interest? Yes. Can a partnership firm pay to Yes Bank 24% interest? Yes. See, there is no restriction on interest payment. I'm not getting the answers, guys. I might as well move very quickly. So I'm going to move very quickly now. So I'm going to move very quickly right now. There is no restriction on interest payment. The only restriction on interest payment is when a partnership firm pays to a partners. The partners can get maximum 12% interest only if it's authorized in the partnership deed. It cannot be retrospectively authorized, and it can be only paid up to the profits. This is section 40B. This is when it's paid to the partners. Perfect. Next, guys, can the partnership firm also pay salary to the partners? Yes, they can also pay salary to the partners. But again, there is a restriction. Yes, there is a restriction on how much salary you can pay to the partners. First restriction, it has to be authorized. Yes, it has to be authorized. Second restriction, it can be paid only to working partners. Yes, salary can only be paid to working partners, whereas interest can be paid to all partners. Next restriction, it cannot be paid retrospectively. Yes, no retrospective payment. Fourth restriction, it can only be paid if you have profits. No, there is no restriction like that. It can also be paid if you have losses. So authorized only to working partners, or no retrospective authorization, and you can be paid only, you also have losses. Yes. So let's see what it can be paid. Guys, if you make a loss, if the partnership firm makes a loss, then how do you calculate this loss or profit? Take your entire expenses, including interest. Yes, including interest, but maximum only 12% interest. Yes. And the loss, you can pay maximum 1,50,000. Yes, 1,50,000 maximum to all the partners. Yes, to all the partners in the whole year. Yes, per annum. So for loss, you can pay, but very low amount you can pay, 1,50,000 maximum to all the partners. But whatever is profit, then you split the profits up to 3 lakhs and above 3 lakh. Up to 3 lakh, you can either pay 90% or 1,50,000, whichever is higher. And above 3 lakh, you can pay 60%. So this is what the calculation is. Let's take an actual example and let's find out. The profit of a partnership firm is 6 lakh rupees after deducting interest paid to partners of 1,80,000 at the rate of 18%. Find out how much is the maximum salary that can be allowed as a deduction. And the salary paid this year is 2,20,000. Is that allowed? We have to find out. This is the question. Let's check. First, is this a profit of the partnership firm? Yes, but this is a wrong profit because you minus 1,80,000 as interest to the partners. Can you minus 1,80,000? No, you can only minus 1,20,000. So from 6 lakh, you will add 1,80,000. That is 7,80,000. And you will minus 12%, that is 1,20,000. So only this much, that is 6,60,000 will be your book profit. Yes, this is your book profit after interest, which is the rightful interest. What if the authorization was only for 10%? Then only 10%. So I have taken 12%, assuming it is authorized. Now on this book profit, let's split it up to 3 lakhs and above 3 lakhs. So up to 3 lakhs, 90%, which is 2,70,000, or 1,50,000, whichever is higher. So 2,70,000 is higher. And on 3,60,000 at 60%, that is 2,60,000. So 2,16,000 plus 2,70,000, that is you can actually pay a salary of 4,86,000. Do I have to pay this much? No, this is the maximum you can pay. Or sorry, this is the maximum you can get a deduction. You can pay even more than this, but the maximum deduction you will get is 4,86,000. You paid a salary of 2,20,000. Is that okay? Yes, that is perfectly okay. So again, revising guys, both salary and interest have to be authorized. Yes, no retrospective authorization. Interest maximum 12%, salary maximum as per these limits. Interest can be paid to all partners. This can be paid only to working partners. First calculate interest and get the book profit. From the book profit you will calculate salary. So always do the interest first and then do the salary part first. Next. Perfect. So this is it guys. That's the chapter. Now let's open up to questions in the book. This is PGBP. Alright, yellow, yellow, yellow is what we will chase. Perfect. Suppose a firm pays interest to a partner at 20% simple interest. The allowable rate of interest is only 12% per annum, hence the excess 8% will be disallowed in the hands of the firm. By the way, I forgot to tell you, whatever is allowed in the hands of the firm as a deduction, the same will be allowed to the partners as income. I use the shortcut same to same. That means if the partnership firm gets a deduction of 1 lakh for interest, the partner's income in PGBP will also be 1 lakh, same to same. What if the partners are paid 1 lakh 50? Doesn't matter what they are paid, whatever deduction the partnership firm gets, same the partner's income. What if the salary is 2 lakh 20 and the firm gets a deduction of 2 lakh 20? Then the partner's income will also be 2 lakh 20, same to same. Sorry, this is the income will also be 2 lakh 20. Since the excess interest has suffered tax in the hands of the firm, the same will not be taxed in the hands of the partner. Basically, whatever is a deduction in the hands of the firm, the same to same will be the income in the hands of the partner. Alright guys, let's do this question. This is X is a proprietor engaged in manufacturing business. Manufacturing means will you get additional depreciation? Yes. Furnishes the following particulars. Compute the amount of depreciation and additional depreciation. First, let's compute depreciation. Opening balance of plant and machinery. So this is the opening balance is 30 lakh. New plant and machinery purchase. So on 30 lakh guys, will you get depreciation? Yes. So let's do this properly. At least one sum. Let's do very properly guys. Let's calculate depreciation. For depreciation, you need to make families guys. One family is plant and machinery, which is at 15%. And another I can see computer. So that is plant and machinery at 40%. Opening value, you always start with the opening value 30 lakhs. New plant and machinery purchase and put to use on 8th of June full year. So add any purchases. New plant and machinery acquired and put to use half year guys. So this 8 lakh you will get half year's depreciation. So this total is 58 lakhs. On 58 lakhs, let's split up. On the 8 lakhs you'll get half year's depreciation. So 8 lakh into 7.5% is 60,000. I'm putting it in a box because it's the final number. And on the remaining 50 lakh, you will get 15% depreciation. Full years, that is 7 lakh 50. Are these two numbers final? Yes, this is depreciation. Now for plant and machinery, which is 40%. Guys, this is computer acquired and installed on 2nd Jan 2022. There is no opening block, only purchases of 3 lakh. On which you will get full year, half year's depreciation. So into 20%. So 3 lakh into 20% is basically 60,000. So this is your depreciation, 7 lakh 50, 60,000, and on the other one also 60,000. Now let's see additional depreciation. Guys, first up, additional depreciation you will not get on opening balance, assuming nothing last year was half year. New plant and machinery purchase and put to use. For this, will you get additional depreciation? Yes. On 20 lakh, 10%, that is 2 lakh. And on new plant and machinery, again on 8 lakh, but only at 10%, that is 80,000. On computer acquired and installed in office, it's an office appliance, no additional depreciation. So additional depreciation is 2 lakh 80,000. Sorry, my bad, calculation mistake. This is on 20 lakh, 20% is 4 lakh, so 4,80,000. Perfect. Next, guys. Yes, good question here. A car is purchased by Dr. Soman a couple of years back for 5,25,000 for personal use, and it is brought into professional use in the year 21-22 by him when its market value is only 2,50,000. Compute the actual cost of the car and the amount of depreciation for the year. Guys, how much will be introduced in the block? 5,25,000. The actual cost will be introduced. And have you put it to use for the whole year? Yes. So into 15% whole year, 5,25,000 into 15% is 78,750 is the depreciation. Compute the actual cost. The actual cost is 5,25,000 and depreciation is 78,750. All right, moving ahead. A newly qualified CA, Mr. Dhaval, commenced practice and has acquired the following assets. Guys, Dhaval will only get depreciation. Depreciation everyone gets. He will not get additional depreciation. Find out the amount of depreciation that can be claimed from his professional income. Let's check, guys. You will tell me what rate of depreciation and you will tell me full year, half year. Guys, date of acquisition we will ignore. We will only see date when put to use. Computer, including computer software. Guys, first what rate will apply here? 40%. But you will not do it like this. You will do it like this. So this is computer, one block, books, another block, and furniture, another block. So there are 3 blocks or 3 families. Let's start. Guys, on 35,000, full year or half year? Full year. So I'm not writing anything. Computer UPS, 8,500, full year or half year? This is half year, so I'm just marking this as half year. Next, computer printer on 1st October, so full year. Next, books 13,000, full year. Next, office furniture 1st April, full year. And next, laptop 43,000, but only half the year. Perfect, guys. Let's calculate depreciation. Very simple now, guys, with the blue line. 35,000 plus 8,500 plus 12,500 plus 43,000. So this is 99,000. Will we split it? Yes, we will split this 99,000 now. Full year, half year. So 8,500 plus 43,000 is 51,500, which is half year. So into 7.5%. No, sorry, these are computers. So into 20%. 51,500 into 20%, which is 10,300. And on the remaining 99,000 minus 51,500 is 47,500. On that into 40%, 47,500 into 40% is 19,000. Next, books, full year only. At what percent, guys? Books is also 40%. So 13,000 into 40% is 5,200. Furniture at 10% is 30,000. Let's calculate total depreciation. 5,200. Have they given one number total? Okay, furniture is 10,000. Let's see if they've given one number. Yes, they've given one number. No, they've given different numbers, guys. No, they've given one number. So 19,000 plus 10,300 plus 5,200 plus 30,000 is 64,500. Let's say if they get 64,500. Yes, the answer is 64,500. Perfect. Next, guys, Gamma is a proprietor, started a business of manufacture of tires and tubes on 1st January 2021. The manufacturing unit was set up on 1st of May. He commenced manufacturing operations on 1st of June, basically full year's depreciation. The total cost of plant and machinery installed in the unit is 120 crores. So plant and machinery is worth 120 crores. On which will he get depreciation? Yes, he will get depreciation. But let's see. The said plant and machinery includes second hand plant and machinery bought for 20. So guys, 20 crores is second hand, so he will only get depreciation on this 20 crores. New plant and machinery relating to the business of scientific research is 15 crores. So on 15 crores, he'll get no depreciation. Why no depreciation? Because he got 100% deduction already under 35 section. And what is remaining? 120 minus 20 minus 15. That is on 85. He will get depreciation also and additional depreciation also. So let's calculate, compute the amount of depreciation under section 32. They don't want additional, no, they want depreciation, so we'll give them depreciation and additional depreciation both. Let's first calculate depreciation. Always do one by one, guys. On 20 crores into 15% is 3 crores, plus on 85 crores into 15% is 12.75 crores, plus on this nothing, 0, so this is 15.75 crores. And additional depreciation on this you will not get, on this only, so 85 into 20% is 17 crores additional depreciation. So this should be your answer, 32.75. if they're given one answer, 32.75. In the exam, guys, they will never give you depreciation full sums like this. They will only give you part of a bigger sum. Guys, here it is, very simple sum. Mr. A has paid some amount for to the following under section 35, that means scientific research. While computing the income, compute the deduction available. So for all these guys, you will get 100% deduction except land, etc. Let's see. Amount paid to notified approved Indian Institute of Science, 100%. Amount paid to IIT Delhi, 100%. Amount paid to a company whose main objective is scientific research, it's an Indian company, 100%. Expenditure incurred for in-house research and development, revenue expenditure, 100%. And capital expenditure, land you will not get. So out of 7.5 lakh, you will get on 2,50,000, 100%. Perfect. Guys, slightly big question. Be very patient with yourself. Mr. A commenced operations of the business of setting up warehousing facility for storage of food grains. So this is food grains, sugar, and edible oil. Food grains is 35 AD, sugar is 35 AD, but edible oil is not 35 AD. That means in these two you will get 100% deduction. In this you will only get depreciation. He incurred capital expenditure of 80, 60, and 50 lakh respectively on purchase of land and building during the said period, January to March. But guys, we'll first start with the incomes. So let's see what their incomes are. The profits of the business before setting up the warehousing facility for storage of food from the business is 16, 14, and 31 lakhs. So 16 lakhs, 14 lakhs from sugar, and edible oil is 31 lakh. You always start with the incomes, and now comes depreciation and deduction. Let's see how it goes. First, 80 lakh is the capital expenditure on purchase on land and building, 80, 60, and 50. So this is 80 lakh, this is 60 lakh, and this is 50 lakh on land and building. Before the business started, doesn't matter even if it's before, as long as you capitalize it, you'll get 100% deduction because guys, you're special. This is specified business. The cost of land included in the above, guys, this 50 lakh is land, 40 lakh is land, and 30 lakh is land. So you remove this, yes. So this is 30 lakhs, this is 20 lakhs, and this is 20 lakhs. And during the year, he incurred further expenditure of 20 lakhs, 15 lakhs, and 10 lakhs. So guys, this is total expenditure. I'm just totaling it up. This is 50 lakhs, this is 35 lakhs, and I don't have space here, but this is 30 lakhs. And this is on land and building. Now let's see, guys. What about this 50 lakh? Can I take 100% deduction? Yes. So the entire 50 lakhs under section 35 AD. So loss of 34 lakhs. Entire deduction of 35 lakhs. So loss of 21 lakhs. And only depreciation on 30 lakhs, depreciation of 3 lakhs. So profit of 28 lakhs. But can I set off one profit against the other? No, because specified business loss is a unique loss. You can only set off these losses against the same specified business income or any other specified business income. So 34, 21, 28. 34, 21. This is a total 34. No, some mistake. 1 second. 34, 21. Oh, food and sugar, and they've done the total. Sorry, this is 55 total. So 31, 20, 34, 21. We've also got right, and the other one should be 28. Where is this? Yes, 28. All right. Mr. Suraj is a proprietor, commenced business of his business of a new 3-star hotel in Madurai, Tamil Nadu on 1st April 2021. So it's a specified business. He incurred capital expenditure of 50 lakh for the business and capitalized the same in the books of accounts. So 50 lakh has already been capitalized. So the expenditure of 50 lakh, you will get 100%. Yes, as long as it's not land. He incurred capital expenditure of 2 crore, again, out of which 1.5 crore was land. So only 50 lakh again. So total deduction is 1 crore. During the year, his income, what was his income, guys? Compute the income. Yes, here it is given as income, guys. The income before this expenditure is 25 lakhs. So I'm taking 25 lakhs here. And 25 lakh is my income. Under 35 AD, I get 100% deduction. So 75 lakh is my loss from specified business. This loss I can set off only against any other specified business. So he also has another hotel in Coimbatore where the income is 120 lakhs after all deductions. So 120 lakhs, can I deduct? Yes, I can minus. So the net income will be 120. Sorry, this I can't minus. I will add and minus. So 120 minus 75 is 45 lakhs. Guys, how do you present this? This is pretty simple. You first take the profits. You always start with the profits. Then for each expenditure, you write the explanation of why you're minusing 100%. You minus that, you get a loss. And from that loss, the profit of the other business can be set off, and you write a working note, and that can be set off only against loss from the same specified or any other specified business. Guys, he has 2 units and he's transferring one asset from one unit to the other, A to unit B. Remember guys, if it's specified business and it gets transferred to non-specified business, then will you reverse it? Yes, you will reverse it, but after allowing depreciation. Guys, salary is paid to the employees, credited and paid in March 2022, 12 lakh. Guys, you've not deducted TDS in this case. So if you've not deducted TDS, how much will be disallowed, guys? 30% will be disallowed. So 30% of this, that is 3,60,000 will be disallowed. And director's remuneration credited in March and paid in April 2022. So again guys, here also TDS has not been deducted. So this one also 30% will be disallowed. Alright, so basically please remember deduction has to be during the previous year and payment has to be till the return filing due date. If both are fulfilled, only then you get the deduction this year. Guys, there are some more, but these are not important. Honestly, I want to do the exam questions on PGBP because all this is just sham just to confuse you. In the exam, PGBP is only like a part of a bigger question. A firm has paid 7 lakh 50 as remuneration to its partners in accordance with the partnership deed and it has a book profit of 10 lakh. Can they pay so much? Let's check guys. 10 lakh split, 3 lakh and 7 lakh. 2 lakh 70 here, and on this 60%, that is 4 lakh 20 here. So 4 lakh 20 plus 2 lakh 70 is 6 lakh 90. And they are paid 7 lakh 50. Sorry, they paid extra. You can pay, but you'll get a deduction only of 6 lakh 90. Guys, here there is a net profit of 7 lakh before deduction of the following items. So first you will check interest, depreciation and only then salary. So this is 7 lakhs. Can I take depreciation of 1 lakh 50? Yes, I can. Interest on capital at 15%. Sorry, 15 I cannot take. So on 5 lakh into 12% is 60,000. 60 I can minus. So that is 7 lakh minus 1 lakh 50 minus 60 is 4 lakh 90. And this 4 lakh 90 I'll have to split between 3 lakh and 1 lakh 90. On this it is 2 lakh 70 because 90% is more, and 1 lakh 90 into 60% is 1 lakh 14. You add up both, 1 lakh 14 plus 2 lakh 70. Excellent enough, good answers there. Is 3 lakh 84. So what is the book profit of the firm? The book profit is 4 lakh 90. And allowable working partner salary as per section 40B is maximum 3 lakh 84. How much are you paying? 220,000 to two partners. So you're paying 4 lakh 80. Is that allowed? You can pay, but deduction will be only 3 lakh 84. Perfect. Moving ahead, guys. Deemed income. Guys, you are supposed to pay these two amounts to a bank or a financial corporation, but you've not paid it. So will you get a deduction? No. You asked them to convert it into 60 equal installments. So 15 lakh divided by 60 and 30 lakh divided by 60. How many installments have you paid? 5 to the first one and 3 to the second one. So 15 lakh divided by 60. Each installment is 25,000 and you have paid 5. So 1 lakh 25. You can take a deduction. Yes, because show me the money. And here 30 lakh divided by 60 is 50,000 and you have paid 3 installments, so 1 lakh 50,000 here. So totally you can take a deduction only of 2 lakh 75. Guys, don't worry about the presentation because PGBP sums, guys, are part of a 14-mark question. So there it's a typical question. When we see exam questions, you'll know. In fact, guys, I'm very tempted to do the May question this time. May question. Let's tackle that. I'll stop here on page number 1 second. I can't suddenly see the page 131. So we'll stop here. What I would do is I will go to this year's paper and we will do a PGBP sum and see how it works in case of PGBP. Guys, here we go. Let's see this sum. I'm keeping it on the screen for a second. I'll be back. Have a look at the sum and see what are they asking you. Sorry, this is the question bank. I want to upload the last paper. Just one second. Yes, guys, this is the first question in the paper. Let's try and discuss this paper and this question and end the session, guys. This is Mrs. Nisha. Everyone start reading. I'll be back in a minute and I will continue this question with you guys. Very, very easy question if you understand the concept well. Let's see, guys. Mrs. Nisha is a resident individual, age 54 years, is carrying on the business of manufacturing textile. Manufacturing means you'll get additional depreciation. The turnover is 250 lakhs. And the current previous year, 250 lakhs means they cannot go for presumptive. And last year it was 600 lakhs. The net profit as per P&L account is 5 lakh 61. So they've already calculated the profit. Yes, guys, this is what they typically do. They already calculated, and whatever wrong or right, we have to correct it. She provides the following additional information that were not considered. So now we'll have to consider them while making the P&L account. Let's start, guys. Depreciation has not been debited to the P&L account. Guys, is that allowed not to depreciate? No, depreciation is compulsory. So details of plant and machinery employed in the business are as under. She does not have any other fixed assets employed at the business. Guys, opening value plus new minus the sale. So let's calculate. I'll do the calculation here on the side, guys. 4 lakh 75. Of course, there's a hidden adjustment, but we will see that soon. Plus 7 lakh 25 minus 75. Let's see the answer, guys. 4 lakh 75 plus 7 lakh 25. This is full year. Minus 75 is 11 lakh 25. On this, will you get depreciation 15%? Yes. So 11 lakh 25 into 15%, 168,750. Can I minus that? Yes, I can. On this, will I also get additional depreciation? Yes, on this new asset. On 7 lakh 25 into 20% is 1 lakh 45. I get that also. But guys, my answer will change when you move ahead. She received a subsidy of 20% on the new machine purchased on 3rd of July. Guys, if you get a subsidy, will that have to be reduced from the cost? Yes. So 7 lakh 25 only into 80% we have to take, that is 5 lakh 80. So I'll have to change my answers. This is now 5 lakh 80. So 475 plus 580 minus 75 is 9 lakh 80. Into 15%, yes, into 15% is 1 lakh 47. So this one will become 1 lakh 47. Next, of 5 lakh 80, will I get additional depreciation? Yes, concept is the same, but only numbers will change. So this will become 1 lakh 16,000. Perfect, guys. Every step you will get marks. So this step done, this step done. Let's go to the next page. She paid job charges for value addition on the fabrics 90,000 without deduction of TDS by an account paid check. So guys, the government is upset because you did not deduct TDS. So 90,000 into only 70% you will get a deduction. So only 63,000 you will get a deduction. 30% will be disallowed. Next, commission paid to one agent which was allowed as a reduction earlier of 40,000 has now been received back. Guys, if you get some money back, congratulations, this is deemed income. So 50,000 will be added as deemed income. Next, 25,000 paid to a creditor for goods in cash. Sorry, you cannot pay in cash. And if it's a creditor, that means amount has already been debited. Then you will have to add back 25,000. I'll repeat. Guys, when you purchase some goods, you pass the entry purchase to creditor. But now that you've paid him in cash, that is not allowed. So you'll have to reverse it, basically add back 25. Incurred a loss of 1,17,500 from eligible transactions carried out in respect of trading in derivatives. Guys, is this a loss? Yes, but which kind of loss? Normal business loss, guys. 1,17,500. How will we see it? We'll see it when we set off profits and losses, but right now just remember normal business loss 1,17,500. Interest received amounting to 2 lakh duly authorized by the partnership deed of Ramji Textiles at 15% on the capital employed. She is sleeping partner. Sleeping partner can get interest, no problem, but not of 15%. So 2 lakh divided by 15 into 12. So 2 lakh divided by 15 into 12, so only 1,60,000. So they will also get only 1,60,000, and in your case also only 1,60,000 will be added. So only 1,60,000 will be added to your PGBP income. As all this is additional information, that means no effect has already been given, so I'm just giving the effect. She received 60,000 by premature withdrawal from deposit. We cannot do this because we haven't discussed deductions yet, so we are avoiding this right now. She sold a gold bracelet used by personal purposes. Guys, this is capital gain. We've again not done capital gain, so I'm not discussing it right now, but it's very simple. ATSCP. She received a gold coin. Yes, we can do this. She received a gold coin bullion worth 55,000 from her cousin, daughter of uncle, during the previous year. Guys, is this MISB SAT job? Yes. Is it from a relative? No, guys. Daughter of uncle, only your daughter, no one else's daughter. So this one is a cousin. So hence, and this is more than 50,000. So is it taxable? Yes, 55,000 will be taxable, but another head called IFOS. So I'm not putting it here, sorry. This will go under another head called IFOS 55,000. Next, she incurred long-term loss from sale of shares of Indian company. The STD is paid on the sale and purchase of shares 75,000. This is a capital loss 75,000. We have not discussed capital gain, but this is a loss from capital gain. She deposited a sum of 50,000. So this is deduction. So as you see, the first question is a mix of PGBP plus deductions plus capital gain plus IFOS. She purchased a new residential house. Again, this is deductions. So guys, see, out of 14 marks, about 8 marks are PGBP. About 3 marks are deductions and about 3 marks are the remaining. So hence, please remember PGBP is only about 6 to 8 marks in the paper. Even if you get this entire sum right with the tax calculation, etc., there is tax calculation also. So this is only 6 marks. Tax calculation will also get 2 marks. So please remember, for PGBP only for 6 marks, think how much hard work you want to do. In my scheme of things, PGBP has to be done, but without the section, so that you don't put too much stress on your mind. All right. That's almost the time that we have. I'm just checking if there's anything else. Yes, guys, we can do one more question and then end the session. No, actually we won't. Today's session has been a little heavy anyways. So what we'll do, guys, we'll just set the agenda for tomorrow. Tomorrow I want to finish some PGBP sums that are left. So what we'll do, instead of doing the module, we'll do every year what are the PGBP sums, we'll do that. So that's a better way because we are looking at what the exam asks us every year. Then we will look at a chapter called Set Off and Carry Forward, which is very nice and easy and breezy after this chapter. And then we will do a chapter which is called Capital Gain, which is going to be our fourth head of income. After that, all heads of income will almost come to an end. So this is tomorrow's agenda, guys. We have not done any rates of tax today, but we could do it tomorrow, some more rates of tax, but that is it. I'm keeping the session open for any questions if you have. Otherwise, guys, please take care. Good night. Slightly early we are ending because it has been a heavy day for you, of course, and for me as well. So ending the session here and see you guys tomorrow. Thank you and good night. Handwritten notes, I've yet to upload it on the drive. I'll upload it tomorrow, please, and we'll take it up from there. All right. Thank you, guys.